Hello and good morning, everyone. Thank you for joining the session. It's yet another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be looking at the key highlight events that are very important in the markets this week. So we'll try to get an overview of the economic calendar, understand what could be moving the markets this week. And once we do that, we also look at technical analysis to try to understand what are the prevailing market patterns. And once we cover that, hopefully everyone will approach the week from an informed perspective. So I'd like to begin with a disclaimer that this session is purely educational. It's not a recommendation to trade, and it's not investment advice. So good morning, Waridi, and thank you for joining the session. So let's get on with it, and I'll be starting with the economic calendar. So as you can see here, we've had one key data event early this morning. This was a speech from Bank of Japan Central Bank Governor Ueda. So he basically highlighted the path that Japan has taken in terms of monetary policy over the last 20 years, basically showing the changes that they are looking to be making moving forward. So he highlighted that one key challenge that the Bank of Japan is facing is determining what is the neutral rate, and of course, re-anchoring the inflation expectations towards 2%. So there was not a major change from the speech. And then, as you can see, for the rest of the day, we will be having two major bank holidays. So one is in the UK, which is the Spring Bank holiday. And of course, the big event is the Memorial Day. So the US is celebrating Memorial Day today, which means that banks or commercial banks in the US will be closed, and at the same time, the stock markets will be closed. So as a result, we expect very low volume today and very little market activity, with liquidity resuming the markets tomorrow on Tuesday. So looking at Tuesday, we'll be starting off on a busy day with early morning report from Australia detailing the retail sales for the month of April. Then we'll get a speech from Swiss National Bank Chairman Jordan. Then two Fed members will be speaking, Bauman and Mester. Then Bank of Japan core CPI at 8 a.m. So later on in the day, we'll get the Case-Shiller Composite Housing Price Index at 4 p.m. Then the Conference Board Consumer Confidence Survey. So later on Wednesday, we'll be focused on Australian Consumer Price Index. So these are a measure of inflation in Australia, where the previous reading was 3.5%, and we expect the overall inflation to have dropped 3.4% in the previous month. So we'll also be looking at a German preliminary CPI, which is expected to have increased by 0.2% in the last month, which is a slowdown from a previous increase of 0.5%. And then we look at the Richmond Manufacturing Index from the US at 5 p.m. So later on, another speech by SNB Chairman Jordan. Then we get GDP data from Switzerland, and of course, the Spanish flash CPI year over year. Later on in the afternoon, we'll get preliminary GDP data for the US. At the same time, we'll get the unemployment claims, and of course, a preliminary GDP price index. So later on at 5 p.m., we get pending home sales before we focus on both natural gas and crude oil inventories at 5:30 and 6 p.m. on Thursday. Then on Friday, we will close the week by first focusing on Tokyo core CPI, as well as the unemployment rate in Japan and retail sales data. Then we get very important data from China, which is manufacturing PMI, as well as the non-manufacturing PMI. And of course, as we approach the end of the week, we'll get core CPI estimate for the Eurozone, which is expected to have dropped to 2.7%. And the overhead is expected to have dropped to have increased in this case to 2.5%. So we'll get Canadian GDP, and of course, the most important data for the week will be the core PCE price index, which is a report that measures the level of inflation in the US, and it's the Fed favorite measure of inflation. So in the previous reading, it was up by 0.3%, and in this case, we're expecting a further increase of 0.2%, which is slower than the previous month. So there will be a lot of focus on the core PCE price index, which is a key driver of Fed monetary policy decisions. So in the overhead inflation report, we saw US inflation dropping from 3.5% down to 3.4%. So if we see further progress in the core PCE price index, meaning that if inflation slows down in the US, then it would increase the bets on a likely RA rate cut by the Fed. But then if we see increasing inflation, which could be, let's say, higher than the previous month, then in that case, we should consider the Fed narrative of interest rates staying higher for a longer period of time. So in summary, we'll have other things happening in the week. So just to show you some key highlights. So the Nasdaq Composite was up 1% last week. The S&P 500 was near flat, while the Dow Jones Industrial Average fell more than 2% last week. So we'll be looking at further progress this week, but today being Monday, we expect almost a muted movement, sideways movement, unless there's anything major that might surprise us in the markets. So on the corporate front, the earnings season is still continuing. We'll have key companies announcing their earnings. So first, we'll be focusing on Salesforce. We'll also be focusing on Costco, Dollar General, and Best Buy. So the rate debate continues. We know that the Fed has been the key driver in the markets this year, with a lot of anticipation for rate cuts earlier in the year, but now that anticipation has really toned down. So the furthest expectation in the market is about 2 rate cuts this year. But then if inflation continues being a problem, then we could be seeing the Fed holding out for the rest of the year. With interest rates high, then it basically implies a stronger dollar. So a hotter than expected reading for US economic output, combined with a hawkish tone from Fed officials in the minutes of the central bank's May meeting, prompted investors to scale back expectations for interest rate cuts again. Investors are now pricing in fewer than 2 cuts for the year, and debate has shifted to whether or not the Fed will make its first cut by September. So as of Friday, markets were pricing in a 50% chance that the Fed doesn't cut in September, a noted shift from the 70% chance investors had priced in a month ago, and that is as per the CME FedWatch tool. So Goldman Sachs economics team pushed back its call for the first Fed cut from July to September on Friday, but noted the timing of the first cut remains a difficult question. So Goldman's chief US economist, David Maricol, reasoned that his team still views these cuts as optional, given the strength of the US economy seen in data like last week's hotter than expected business activity reading. All else equal, signs of strength in the economy lessen the urgency for the Fed to cut interest rates. So he also added that while Goldman Sachs expects inflation to be much improved by September, it will still likely be above the Fed's 2% target, adding to the optionality. So with earnings season largely over, Truist co-chief investment officer Keith Lerner told Who Finance the discussion around the Fed inflation and economic data will once again take center stage for markets in the near term. So that just makes for a more volatile market. So we should be expecting to see more volatility going into July. So core PCE price index will be the key focus this week. And as you can see, having bottomed around here, and this was in August last year, you can see that inflation has been on the rise again, with the 3-month percentage change being at 4.4%. If you look at the annualized 6 months percentage change, still at 3%, and of course the year-over-year change at 2.8%. So a higher or a hotter than expected inflation report could potentially lead to a strong dollar. But then if we see inflation subsiding, moving reasonably towards 2%, then in that case, we might consider a case for a weak dollar. So on that note, we know that there ain't much we're expecting in the markets today. So I believe at this point, we can switch over and now start looking at technical analysis to try and understand the key price action metrics that could play out this week. So I'm checking on the comment section. If you have any question, feel free to type it in the comment section, and I'll be responding to that question as we approach the end of the presentation. So hello J Squad, hello Tiger Music, Malombe, thank you for joining. Hello Manthi, So what is your bias for the dollar this week, considering last week's bullish price action? So we'll be checking on that too as we proceed with the analysis. So of course, in technical analysis, we usually start with the dollar index, trying to understand the current position of the dollar and where it might be headed next. So we saw this slow climb happening, and we predicted it last week along these two trend lines. So for those who have been attending, we've had these two trend lines for a while. And last week, we saw the dollar creeping higher. So in this case, the projection was that the dollar would move from this point all the way up towards the upper trend line. So it took quite some time. This was a period of about 7 days. And the last price action that we saw on Thursday managed to hit, to get close to this upper trend line before we saw the sell-off happening on Friday. So this week, I expect the dollar to continue attempting to make a recovery. So in this case, potentially testing the upper trend line again before making any major move. So for now, the pullback on Friday might be a key thing to consider. So if you are intraday trading, you might want to consider these as the key important levels for the dollar. The extreme highs and lows on Friday represent two good resistance points and two good support points. So for today, I expect the dollar to be trading sideways with less volatility, but for the week, an attempt to retest this area could potentially play out, but I could also be wrong and the dollar could continue weakening. But for now, my analysis is that the dollar now attempts to go back higher. So for the Euro USD, we know that this pattern has been playing out as expected. So now we are seeing the market at a key price action point where the euro managed to bounce on Friday and get towards the upper trend line, and as we had projected. And then from here, it's an area where you wait and see until you see evidence of more price action. So for now, it's a more pronounced sideways momentum. So there's nothing much happening here. If you're just trading here, the potential of making a good profit from a trade is likely to be very minimal unless there's a major breakout. And of course, the key levels to watch will be this area here. And of course, on the upper side, we'll be looking at the last high that we had on Friday. So if the market happens to break either of those, then we will have a direction. But for now, with the banks on holiday, we don't expect much of an activity. So it's similar across board. For instance, we had this triangle happening on USD against the Swiss franc. Nothing much was happening. And I believe the market has just maintained the same kind of price action without much activity. So if you think of this as the support area and this as the resistance, then you can see that the price action of the last 2 days, the last 2 trading days, has just been a sideways momentum. So we don't have any major breaks. So if you go to the 1-hour chart, then you can see the market is really struggling to break that area. So it has happened before when the market was unable to break the area, and now it's happening again. But then if we happen to see a strong dollar, then a likely signal would emerge if the market happens to make a break above this area here. So I would be very concerned if the market made a break there today, because it will likely mean that there is a good opportunity that the market continues higher. But for now, if the market remains on a sideways momentum, just sit on your hands and wait for the signal. So in this case, if you look at pound USD, we've had quite a strong rally, bouncing from these lows, breaking this trend line. So we saw it play out last week. Then from here, we had the market breaking, but now hitting a new high that we had plotted here as a resistance. So we mentioned that if the market bounces and breaks above this area, then the next target is 1.27593. So this played out well last week. You can see the market making a run for this area, pulling back to the same level and then up. And now if I just clean the chart and remove every noise, sorry for that, looking for this other one, then you can see that this trend is kind of weakening. And last week we had highs that are now getting lower. So if you look at the relationship between the high that we had here on Wednesday, followed by Thursday and then Friday, then it's literally a market that is finding a very strong resistance there. So if you look at the support area, you'll notice that we had a trend line here. So the market eventually made a break, didn't hold for long, went right back into the pattern. So from the forward chart, you can see it's a struggle to make newer highs. And from the long tails on the upper side of these four candlesticks, it indicates a weakening trend. So at some point, you should be expecting to see the market pulling back downwards. And of course, a key idea would be if the market happens to break this area here. So for New Zealand USD, we've had the market opening with a gap downwards. So notice the difference between the two currencies. For New Zealand, they don't have a bank holiday, so we had a lot of activity. And the US, the banks are closed. So the market opened with a gap downwards, but then immediately closed within the hour. And since then, the market has just been pushing higher. So in this case, the same pattern continues. It's something we've been covering for the last couple of days. Of course, in this case, we expect the market to continue extending this bullish momentum and potentially get towards the upper trend line. So this is a key area to observe. And of course, if we plot the price action is around 0.61417. So for USD CAD, we had the market making a strong break, but then immediately changing direction and moving back downwards. So the price action of last week was a very strong momentum for the dollar. Then it took a step back against the Canadian dollar, and now we are right back into the same pattern. So in this case, if you zoom out, you notice that the market has just changed the course of this trend line from that to this. So now we operate with the new information here. And now seeing the way the market made a very strong reversal from the daily chart, you can identify that this was a immediate change in the trend. So having a couple of days where the market was just moving higher, I'm just trying to delete some of this so that the chart is clear to you. So now you can see the swings and how they have been playing out on the daily chart. So the market is just swinging up and down, and then following the price action of last week, then this week we might expect that this strong entry by sellers could continue pushing lower towards the 1.35890 price level. So for AUD-USD, same thing as what we have seen in New Zealand dollar against the US dollar. So after making this break downwards, and now we have a bank holiday in our hands, then it makes more sense that the market is making this upswing, and the upswing is limited by the resistance on the upper side. And you can easily plot the area of resistance, which has been quite consistent. So now the market is looking to test a key price level that was previously acting as support and now turned into a resistance. So I would be very observant of this area here, around 0.66458. So in this case, once the market gets to this area, then we'll be trying to understand whether there is a break or a bounce. So normally when there's a key level structure like this one, if the market continues with a break, then we could be expecting a break, retest, continuation kind of price action. But then there's also that case where the market just gets close to a trend line and then immediately changes direction and moves towards the upper trend line. So it could also play out the same way. So we don't know this yet. So we observe the price action around this area to see whether there is a break or a bounce. So USD has maintained the bullish momentum, and now we are very close to a previous area where the Bank of Japan intervened around 158.019. So having seen the the USD attempt these bearish momentum cycles, now we have seen the slow climb. At first, it was very aggressive. Then in the last 7 days, it has been quite a slow climb. So we mentioned that last week, if the market happens to break this area, then the bias turns to be bullish. And now in this case, what we are seeing is the market finding this area as a good support. And now potentially we could be seeing the market continuing the slow climb and eventually getting to the previous intervention point of 158.019. So for now, especially today being a bank holiday, we could be seeing the market making this slow climb towards the previous high. But also, it's very important to trade this carefully, because the Bank of Japan could take advantage of the bank holiday in the US to support the yen, and we could be seeing a very strong acceleration of the yen against the dollar. So we don't know whether it will happen or not, or when it will happen. The Bank of Japan doesn't announce that information. So if you're going for bullish positions in USDN, make sure you trade it with very tight stops. So silver has been one of the best stories in the market this month, having made this strong rally and broken previous highs of 30, and now at 32.483, which was the previous high. We saw silver prices collapsing further back downwards, breaking this support area, but then it didn't get to our projected support at 29.814. So looking at the price action from last week, you'll notice that we had what looks like a triangle. So if I remove everything and then we look at what happened on Thursday, Friday, then it's quite clear to me that the highs versus the lows we got are leading to a price action pattern that looks like this, which means the price action we are seeing this morning is literally a breakout in silver prices, and we could be seeing some further acceleration higher. So this is on a smaller time frame because silver is quite volatile. So in this case, having seen this kind of price action this morning, only basically points to the market now making a reversal. And now if you go to a higher time frame, let's say the 1 hour chart, and then you zoom in, then we had our previous support area now turned into a resistance. So the market could potentially struggle breaking $31.035. But then if we have this break, then it's within expectation that the silver squeeze could continue, and we could be seeing the market pull back and retest the previous high at 32.499. So gold has been pretty slow. So we mentioned last week that we expected gold to drop to this price level of 23.30. So it played out on Thursday as well as on Friday. So we didn't have much of a strong bounce. And today you can see gold creeping up higher, but we don't have that much momentum. So I expect it to be a slow day. But eventually over the week, I expect the market to first test the 23.78 price level and potentially get back to 2400. So Brent oil has been on this particular price action formation for a while. We managed to speculate the previous high here, and the market made quite a big drop all the way down to the previous low here of $80.87 per barrel. So since getting to that price action level, you can see the first instance of the market changing direction was a nice pin bar at this previous support. So you can identify this area here. So market gets here, forms a pin bar, a very strong rejection of lower prices, and makes a bounce towards the upper side. So from the 1 hour chart, this is how it looked like. So if you zoom out, you notice that the price acceleration on Friday was a very strong signal that the market has found support. So we could be seeing some further extension of the same with a key price action target being the highest price that we saw on Thursday. So we could be seeing the market completing this cycle and going for the $82.717 per barrel. But for now, with the low volatility, I don't know if it will play out today, but patience will be key in this one. So US equities managed to dump on Thursday and then made a recovery on Friday. So expect this form of recovery to continue. So number has only been going up this year. So despite the sideways momentum, an attempt to move lower followed by a bounce, then the expectation is that the breakout failed, and now we are looking at a potential reacceleration higher. So this area here was acting as the support, and the market made this breakout here. So if you notice, the market made a pullback the following day, and it's right back into pattern, which means that the potential for the market going for a new all-time high this week is also very high. So in this case, potential of the market getting to 53.49 and breaking higher. But for now, we expect a slow market activity because the stock market is closed. And we know that the indices are basically a weighted average of the stocks. So if there's no activity in stocks, then very little activity on the equivalent index. So the Dow Jones is also closed today. So now trying to find some bottom here. So after NVIDIA earnings, the Dow didn't get much support compared to the other indices. So we had a much bigger fall in the Dow and little to no recovery on Friday. So today we could be seeing the Dow continuing to lose, but then for the tech sector, especially the Nasdaq, I expect to see some further upside momentum. So having seen the market made such a strong recovery on Friday, then today the potential for another all-time high remains possible, but then we don't have much activity. So potentially this could be playing out on Tuesday as the market attempts to recover the losses it made on Thursday last week. So Bitcoin, on the other hand, has been on a bullish trajectory, but it keeps finding a very strong resistance around $71,000. So after seeing this price action pattern play out, we had this area here acting as the resistance, and we had a slight break last week. So if I map this well, then you'd notice that we had this break where the market went up and topped at 71,976 before pulling back downwards. And now it makes more sense to operate with the lower side trend line. So we had this trend line connecting these 3 days. And now that the market is making a swing downwards, what we are seeing here is a potential for Bitcoin retesting this trend line before continuing. But then the idea overall is that Bitcoin is making more attempts to break the upper trend line compared to the lower trend line. There's a very strong bullish case for Bitcoin this year. And of course, when you consider the current US elections, and now that Bitcoin has become a major topic, a major discussion issue, with former President Trump announcing that he will be supporting Bitcoin if elected, it created a lot of buzz about Bitcoin over the weekend. And now we could be seeing the market making a run for it. So for now, we had this pattern forming last week. Market made a break towards the lower side. So it was a nice intraday trade. But now, looking at the price action now, it basically implies that there is a lot of sideways momentum. So judging from what we are seeing here, and then what we are seeing here, then you can see the overall picture is a triangle, meaning that for this estimated period, the price of Bitcoin has just been moving sideways. So a breakout here would be very important to identify a trading opportunity here. So NVIDIA made a break, traded above $1,000 for the first time ever. Crossed the market on Friday at 10:58. Today, the market will not open, and the stock will resume trading on Tuesday. Also, they announced 10-to-1 share split, which means that in mid-June, the number of shares will be multiplied by 10, but the price will be divided by 10, which means that the shares will begin trading at around $100 per share. So this is taken as good news. The market was quite positively responsive. So I remember we have been analyzing this stock right from this bottom. We covered this rally and the extension to the previous high. So for now, potentially we could be seeing a pullback. So let's just remain positive, wait for the pullback before squeezing in more longs. So on other assets, we have natural gas futures making a big sell-off last week. So this week we'll have the US natural gas storage data, which will show us whether the supply is increasing or reducing, which could be a major signal. But for now, we await for the market to give us more data. Considering today is a bank holiday, nothing much is happening here. So high-grade copper futures made a big sell-off, but then after dropping that much, it's basically started forming a triangle. So it's a consolidation zone, which means that at some point, so at some point, we should be expecting to see the market now showing us a strong signal. And there's a good chance that this could be playing out today. So the squeeze on copper is potentially very strong and might continue even in case of a bank holiday. So in this case, idea would be to buy if the market shows a strong momentum after breaking this trend line. So CAD JPY managed to form a very strong resistance here, broke the trend line on Friday, and now is attempting to break higher. So this could be a major signal trading for the day. But as I mentioned, for all JPY pairs, make sure that you trade with very tight stops. So then, as we approach the end of the presentation, we have the Hang Seng Index. So last week I mentioned that we didn't know the exact price level where the market would bounce, and I drew these three trend lines. We didn't know exactly whether it would happen here or here or here, but then eventually the price action is clear, and now you can see the market making a strong bounce. So this index has been pretty strong for the better part of the year, showing that the Chinese equities are now making a bounce. So having seen the pin bar here, followed by the reversal here, shows that the market is now finding new entrants. And the strong rally we have seen from that bottom, which is about, this is 1.68%. It has already broken the upper trend line. So if I was to use this, then you'd notice that there has been a line that the market has been following for the last couple of days, and that was just broken in the previous couple of hours. So in this case, even if you use a smaller time frame, let's say the 15 minutes chart, to visualize the different swings, you notice that every time the market has gotten to this trend line, found resistance and kept going down. And now, for the first time in quite a period of time, we have this breakout here representing a potential change in market direction. So in this case, we could be seeing an acceleration of price higher, and I think it's a good area to be finding a pullback entry, targeting the previous high, or the market making a run for the previous high, which would be a nice run on the Hang Seng Index. So USD trading against Turkish lira is currently showing a very strong rejection of lower prices. So main reason I included it in today's analysis is because of the candlestick we had at midnight. So you can see the green candlestick with a long tail towards the lower side, indicating that there was a very strong drop which was rejected immediately, which means that we could be seeing the Turkish lira continue to slide against the dollar, and this could play out towards the previous high. So this is something to consider for the week. So that's it for the day. I'll be checking on the questions. Seeing a comment here. Let me check from the last question I checked. So I see the DXY is in sweeping pullback before taking the liquidity. The boom long, what is your take? So at some point, I expect the dollar index to be making a recovery. So just switching to the chart. Yes, we are seeing this drop, but we could be seeing a very strong support around this area here. So for now, there's a little to no price action because of the holiday. So I expect a majority of the activity will be happening tomorrow. So for this, it doesn't mean that much is happening in the markets. But once the market bounces, we could potentially be seeing a similar price action with here, where the market go to the same level of 104.52 and made this comeback. So kindly go to core PCE on the economic calendar, then help you understand how to read it and interpret it on the charts. I'll try that. Let's see, just a sec. So this will be happening on Friday in the afternoon. Yeah, so this is a price PCE price index month over month. So previous increase was 0.3%. Then there is year over year 2.7. But then the central bank of the US focuses on the core, and of course we have the core year over year, which is the overall focus. So this is what we have been experiencing. So in the previous reading, 4.763, and this has just been considerably dropping, with the latest being 2.8% in February, and now 2.8% in March. So it shows that this is a flattening, meaning that the progress that the Fed was achieving month over month, with a consistently dropping inflation is now becoming slower, and there's the risk of inflation increasing yet again. So if this plays out and we see an inflation report that is higher than 2.8%, then it basically means that the Fed is losing the battle on inflation. And as a result, the Fed may consider holding rates higher for longer, which is positive for the dollar. But then if we see a drop in inflation below 2.8%, then it basically means that the Fed might consider the early rate cut in September. And as a result, we could be seeing a much weaker US dollar. So I hope that that question is answered. Notice the price action on Australian dollar against the Australian dollar against the US dollar is the same as the euro dollar. Yes, when the dollar is very strong, it tends to dominate market price action. So you might see similarities on these major currencies against the dollar. So it's quite normal and within expectations. The Nasdaq index is open and trading, but then a majority of the activity is usually backed by the performance of those stocks. So there's literally 100 stocks, tech stocks in the US backing, forming the Nasdaq 100 index. So if the stock market is not opening today, then you should not be expecting much activity. But then from the recovery we have already seen, then there's that expectation that the next Nasdaq looks to hit an annual time high later today. So next question from Ernest, is gold making its new move to a bearish market, or will it recover to 2400 according to fundamentals and not technically? So this is based on fundamentals. A little bit of research will show you that China is literally buying a lot of gold. And by China, I don't just mean the government, but also the corporations are buying a lot of gold ETFs. So the trend is currently very strong in driving gold prices. So in this case, I expect the gold rally to continue. And in this case, we could be seeing the market going back to 2400, but this could take some time. So it's not an immediate one-time move. So majority of the price action is expected to be happening on Friday when we have the core PCE price index data, which will impact the value of the dollar. And remember, gold is traded in dollar terms. So there's a question on TradingView. I don't have an answer yet, but I would say it's something that is within the pipeline. There's a comment on congratulating Manchester United. Congrats on the winning the FA Cup over the weekend. There's nothing wrong with acknowledging or congratulating a team. So thank you very much, guys. Thank you for your time. I hope you enjoyed the session. So remember to like the video and share. Also, if you are just starting your trading journey, make sure to check out the Novice to Pro series available on FXPesa YouTube. And if you're just starting your trading journey, also remember to check out the links below to register for a trading account. So thank you very much, guys, and I hope to see you on the next session, which will be exactly the same time tomorrow at 11 a.m. But tomorrow we also get an extra session at 4 p.m. where we cover the New York Open. So thank you, guys. See you then.